Another accounting standardization is reduce scope of creative accounting. जो स्टैंडर्ड सेटिंग प्रोसेस है उसके बारे में द इंस्टीट्यूट ऑफ चार्टर्ड अकाउंटेंट बीइंग अ प्रीमियर अकाउंटिंग बॉडी इन द कंट्री took up itself the leadership role by the Constitution Accounting Standard Board in 1997. Institute of Chartered Accountants of India, being a premier accounting body in the country, took up itself the leadership role by constituting accounting body in 1997. Then the ICAI has taken significant initiative for the issuance of accounting standards to ensure that the standard setting process is fully consultative and transparent. Okay, then it's a go back. The accounting standard boards considered the international accounting standards. International Financial Reporting Standards (IFRS) is a IFRS while framing accounting standards in India and tried to integrate them in the light of the applicable laws, customs, usages, and the business environment in the country. The composition of accounting standard boards include the representatives of industries, associations of industries, namely the ASSOCHAM, CII, and FICII. That's called the regulators, academic, government grant departments, etc. All are the member of that. Although accounting standard board is a body of constituted by the Council of the ICAI, and it is a accounting standard board is independent in the formulation of accounting standards. NFRA recommended these standards to the MCA, Ministry of Corporate Affairs. MCA has to spell out the accounting standards applicable for the companies in India. This one is that there are many steps of that, but step by step we are going to that one. Okay, step one is identification of areas. Identification of broad areas by the accounting standard boards for formulation of accounting standards. Okay, the second step is that constitution of study groups. Constitution of study groups by the accounting standard board of to consider a specific project and to the prepare primary drafts to proposed accounting standards. The draft normally includes the objective and scope of the accounting standards, definition of the terms used in the standards, recognition, measurement of the principles. It means simple as that we are just normally include the object, scopes, what is the standard and definition in that time is used. Okay, and what is the principle, whatever the applicable presentation disclosure the requirements needs in that time. Okay, and the consideration the primer draft prepared by the study of group of accounting standard boards and the revision if any of the draft on the basis of deliberations. Okay, step 3 is that preparation of draft and its circulation. In this step 3 we are knowing that what types of draft we are preparing and what is the circulation is required. Okay, circulation of draft of accounting standards after the word revision by the accounting standard board to the council, members of the ICAI, and the specific outside bodies such as the MCA, Securities and Exchange Board of India, I mean to the SEBI. Okay, and the controller and the auditor general of the India, Central Board of Direct Taxes, standing conference of public enterprises, etc. for the commences. Step 4 is that ascertain of views of different bodies on draft, meeting with the representative of the specified outside bodies to ascertain their views on the draft of proposed accounting standards. Step 5, finalization of exposure draft ED. It's called ED, that one is one ED. ED means exposure draft. Okay, not N plus anything else. Finalization of the exposure draft of the proposed accounting standard and its issuance, inviting public comments. Okay, step 6 is that comments received on exposure draft. Okay, and which types of comments we have received is a negative and positive, depends on that your exposure. Consideration of comments received on the exposure draft and the finalization of the draft accounting standard by the accounting standard board of for submission to the council of the ICAI for its consideration for and approval of insurance. Step 7 is that modification of the draft. If you have any types of comments and any types of negative points, so you choose to modify and then the reissue of that ED. Okay, consideration of the final draft to the proposed standard by the Council of the ICAI. Then you should to go to ICAI and you should the Council of the ICAI, and it found necessary modification of the draft in the consultation with the ASB is done. Accounting Standard Board is done. Then step 8 is issue of accounting standard. It means that there are the total 8 steps where are the follow when a make a accounting standard. Okay, in our country in India, when will it when it have done accounting standard that time. Okay, so there are total 8 steps is in that, and the last step is that when ICAI and all the other authorities issue of our accounting standards. Okay, the accounting standards on the relevant subject for non-corporate entities is then issued by the ICAI. Okay, for the corporate entities, accounting standards are issued by the MCA. It means Ministry of Corporate Affairs in the consultation with the NFRA. Okay, after the consultation of the NFRA with the, then it will issue. Okay, in the company level, not for everyone. Okay, so there are the 8 steps. It may be useful for you, and if you are prepared and the 8 steps, it may be helpful for in your MCQ in the 30 marks in within. Okay, if you are preparing MCQ, so you should to go this one also. Okay, okay. Then we have done this one. An earlier accounting standard used to issues accounting standard interpretation which address questions that arise in course of application of a standard. These were therefore issues after issuance of the relevant standard. Authority of the accounting standards ASI was same as the AS. Okay, which is it relates. Both are the relatable of that. Okay, however, after notification of accounting standard by the central government, it means central government notify which one of the accounting standards, which one for the companies, where the consequence portion of the accounting standards of India ASI. Okay, ASI means accounting standard interpretations was merged explanation to relevant paragraph of the accounting standards. Then the Council of ICAI also decided to merge the consequence portion of ASI and explanation to the relevant paragraph of the AS issued by them. Okay, the one things and is also added an accounting standard and by the paragraph this one issued and by the Council of the ICAI. Okay, after the Council of the ICAI, they decided to merge one part of that is called the ASI, accounting standard interpretations, that's called. Okay, this initiative was taken by the Council of the ICAI to harmonize both the set of standards AS accounting standard issued by the ICAI for the non-corporates. Okay, for the non-corporates and issued by ICAI accounting standard, but MCA come where in the corporates and they issue the accounting standards. Okay, in the for the corporates for the corporate accounting standard issued by the MCA and the normally person issued by the ICAI for non-corporates, which one we are not following in the non-corporate entities. That's why issued by the accounting standard by the ICAI. Okay, it may be noted that as per the section 133 of the Company 2013. Okay, section 133 of the Company Act 2013 by the central government may prescribe the standard of accounting and the addendum thereto as recommended by the ICAI constituted under the section of section 3. The Chartered Accountant 1949 in consultation with the after examination of the recommendation made by the NFRA. Okay, then next, how many accounting standards are there? There are total 29 accounting standards, but in right now there are 27 because there are some changes in going on in that. Okay, so there are 29 accounting standards. This that one issued. Okay, 29 accounting standards are issued, but in the right now we have only 27 accounting standards because accounting standards are 6 AS6 for the recording depreciation of accounting has been withdrawn on the revision of accounting standard 10 property plant and equipment. It means accounting standard 6 and 10 both are the merge and maybe both are the indicate themselves. Okay, depreciation it's called accounting standard 6, accounting standard 10 is called the property plant and equipment. That's accounting standard 8 accounting for research and development. It means accounting standard 8 is called accounting for research and development has been withdrawn the accounting standards 26. It's called the intangible assets. Okay, accounting AS6 is convert in the AS10 with a combination and AS8 with combination with AS26. AS10 is a property plant and equipment and merged by the depreciation. And AS 26 is called intangible assets, and the merged by AS 8. In AS 8 is that accounting for research development. Okay, so these two are the keys in that accounting standards. So that less effective, there are the 27 accounting standards at the present time. The accounting standard issued by the accounting standard board established standard have to complete by the business entities so that the financial statements are prepared in the accordance with the gap. In recent times, there are various improvement development in the global accounting standards which have taken place in India. India, Indian accounting standards have become mandatory for the certain classes of our companies as per the MCA, which one of the MCA roadmap. Okay, roadmap as being the guidelines to prepare financial statements have to keep pace with these changes in global accounting scenarios. Okay, and the number of fundamental changes have been made in these accounting standards so as to be globally aligned as far as possible. And what is the MCA wide notification 30 March 2016? You should to note this one, it may become in the MCQ. MCA wide notification 30 March 2016 announced companies amend the rules 2016. MCA by notification 30 March 2016 announced companies accounting standards rules 2016. These rules were surpassed by the companies accounting standard rules 2021 were notified by the MCA on the 23rd June of 2021. Various accounting standards, accounting standard 2, 4, 10, 13, 14, 21, 29 have been revised to make them in line with the corresponding in Indian accounting standard to extent the possibles. Earlier accounting standard 10 was on accounting for fixed assets. These are accounting standards which were applicable on the dates. Like that, accounting policies 1 April 1993 is applicable. Valuation of inventories 1 April 1989, it's and revised also. Okay, cash flow statement 1 April 2001. Contingent acquirement after the balance sheet date revised 8 April 1998, and the net profit and loss period trying changes in accounting policies 1 April 1996. Construction contract, it will come 8 April 2012. Okay, contract and construction contract came 1 April 2002. Revenue recognition came 1 April 1993. Property, plant and equipment revised 1 April 2026, and the effective of change in foreign exchange rates 1 April 2004. Accounting for government grants. Accounting for government grants. Let's see the change. Okay, yeah, this one. Accounting for government grants 1 April 1994. Accounting for investments, this one revised 1 April 1985. Accounting for obligation revised 1 April 1985. Employee benefits 1 April 2006, and the borrowing cost 1 April 2000. Segregation reporting 1 April 2001. Related party disclosure 1 April 2001, and leases and all the things 1 April 2001, and the earning per share 1 April 2001. Consolidated financial statements revised it when 1 April 2001. Accounting for taxes on income 1 April 2006. Then accounting for investment in associate 1 April 2002. Discontinuing operations 1 April 2004, and the interim financial reporting 1 April 2002, and the intangible assets 1 April 2003. Financial reporting of interest in joint ventures, it's reporting in 1 April 2002. Impairment of assets 1 April 2008, and the provision and the content liabilities and content assets, it's called 1 April 2004. Note, is there one note, it would be readful. In the study material, accounting standards have not been discussed sequentially. Instead, relative accounting standards have been grouped and discussed in the ensuing chapters for ease of understand. Example presentation and the disclosure based on accounting standard like 1, 3, 17. 18, 20, 24, and 25, okay, have been grouped in one chapter. That chapter wise grouping accounting standard have been discussed in the study material. It means it say that we have not created in just on one chapter in one page, one PDF. We have make chapters like that. Chapter number 4 have these accounting standards for the detailing purpose. Okay, chapter number 5 have these accounting standards, and chapter number 6 and 7 are these also, and 8 and 9 and 10 have these accounting standards in the basically on the detail wise. Okay, let's it will discuss very soon. Status of accounting standard. What types of status in that time of accounting standard? It has already been mentioned that the accounting standards are developed by the ASB, and ASB are developed by the ICAI. Okay, we have already know that accounting standards developed by the accounting standard board, and the accounting standard board developed by the ICAI. Okay, Indian. Okay, you know well ICAI. The Institute of not being a legacy body can influence companies with its standards only by its members. Also, the standards cannot override the laws and local regulation. The accounting standards are nevertheless made a mandatory from the dates specified in the respective standards, and generally applicable for all enterprises. Okay, depend all enterprises subject to certain exception. The implication of mandatory status of an accounting standard depends on whether the statute government in the enterprises concerned requires compliances with the accounting standard. The Companies Act had earlier notified Accounting Standard 28 as mandate the corporate entities to comply with the provision stated therein. However, in 2016, the MCA withdrew. However, in 2016, the MCA withdrew Accounting Standard 6. Hence, with there are now only 27 accounting standards for the companies and the standards rule 2021. Okay, need for conversion towards global in the standards. The last decades was witnessed a sea change in the global economic scenario. The emergence of national corporation in search of money, not only for fueling grow but to sustain ongoing activities, has necessitated raising of capital from all parts of world, cutting across frontiers. Okay, raising funds from the international markets. Each country has its own set of rules and regulation for the accounting and financial reporting. There are when enterprises decide to raise capital from the markets other than the country in which it is located. Okay, the rules of regulation of that other country will apply, and this is turn will require that the enterprises in its position to understand the differences between the rules governing financial reporting in the foreign country as compared to its own country of origin. Therefore, translation and restatements are of utmost importance in a world that is rapidly globalizing in all ways. Further, the accounting standards are principles need to be traversed so that the larger society develops a degree of confidence in the financial statement which are put forward by organization. Compatibility of financial statement. International analysts and the investor would like to compare the financial statement based on similar accounting standards, and this has led to the growing need for an internationally accepted set of accounting standards for the cross-border filings. Harmonization of financial reporting around the world will help to raise confidence of investors generally in the information they are using to make their decision and assess their risk. Third point is that uniformity, compatibility, transparency, etc. etc. A strong need was felt by legislation to bring about uniformity, rationalization, compatibility, transparency, and adaptability in financial statement. Having a multiplicity of type of accounting centers around the world in against the public interest. If accounting for the same events and the information produce different reported numbers depending on the systems of standards they are being used, then itself event that accounting will be increasingly described in the eyes of those using the numbers. It creates confusion, encourages error, and may be facilitate fraud. The cure of these ills has to be single set of global standards of the highest quality, set in the interest of public. Global standardization facilitates cross-border flow of money. Global listing in different stock markets, compatibility of financial statements. Okay, global investment. The conversion of financial reporting and accounting standard is a valuable process that contributes to free flow of global investment and achieves substantial benefits for all capital markets stakeholders. It improves the ability of investor to compare investments on a global basis and thus lower their risk of errors of judgment. It facilitates accounting and reporting for companies with global operation and eliminates some costly requirements like reinstatements for financial statements. as the potential to create a new standard of accounting stability and greater risk transparency provide to value of all market participants, include regulators. Okay, regulators. It reduced the operational challenges for accounting firms and focus their values and expertise around an increasingly unified set of standards. It creates an unprecedented opportunity for standard setters and other stakeholders to improve the reporting model for the companies with joint listing in both domestic and foreign country. The conversion is very much significant. The International Accounting Standard Board (ISB), with a view of achieving the object of setting global standards. The London-based group named the international body standards responsible for developing the international accounting standard was established in June 1973. It is presently known as the International Accounting Standard Board (ISB). The ISB comprised the professional accountancy bodies of over 75 countries, including the ICAI. Okay, primarily the IASC was established in the public interest to formulate to and publish IAS to be followed in the preparation and the presentation of financial statements. IAS were issued to promote acceptance and observation of IAS worldwide. The members of IAS undertook a responsibility to support the standards developed by the IASC and to be propagated those standards in their respective countries. Between 1973 and 2001, the IAS released IAS between the 1987 and 1989. IAS restructured their organization, which resulted in the formation IAS issued by the statement about the current and the future standards. IASB published its standards in a series of the documents called International Financial Reporting Standards. However, IASB has not rejected the standards issued by the IAS. Those documents continue to be designated and the International Accounting Standards. The standards issued by the IAS till 31 March 2001 are known as the IAS, and the standard issued by the IAS in IASB since 1st April 2001 are known as a IFRS. Okay, we known as a IFRS when 1st April 2001. International Financial Reporting Standards as a global standards. The term International Financial Reporting Standards (IFRS) comprise the IFRS issued by the IASB very well, and we know very well. IFRS International Financial Reporting Standards as a global standard, and it was issued by the IASB. Okay, and IFRS issued IAS issued by the IASC and adopted by the IASB. Means everything is dependent on the whole of the IAS. Okay, IFRS and IASB. We are the discussing about this. Maybe this chart is very helpful for you. Please note down in your notebook. IFRS issued by the IASB and IAS issued by the IASA. Okay, interpretation is issued by the Standard Interpretation Committees (SIC) and the interpretation issued by the IFRS Interpretation Committee of the ISB, called by the IFRS International Financial Reporting Standards Interpretation Committee. IFRS are considered as a principle-based set of standards. In fact, they establish broad rules rather than detecting specified treatments. Every major nation is moving towards adopting them to some extent. Large number of authorities permits and publics companies to use IFRS for stock exchange listing purpose, and the addition of banks, insurance companies and stock exchange maybe use them for their statutorily required reports. So over the next years, number of companies will adopt the international standards, and these requirements will affect thousands of enterprises including their subsidiaries, equity investors, joint venture partners, and the increased use of IFRS, but is not limited to public companies. Listing requirements or statutory reporting. Many lenders and regulatory and government bodies are looking to IFRS to fulfill local financial reporting obligations related to financial or licensing basis पे. Becoming IFRS compliant. Any country can become a IFRS compliant either than the adoption process or by the conversion process. IFRS compliant in two techniques. First one is adoption. First one is adoption, and second one is conversions. Okay, adoptions and conversions. Conversions. There are two techniques of that one. Okay. Adoption process. Adoption would mean that a country set a specific timetable when a specific entities would be required to use IFRS are as issued by the ASB. Technique 2 is conversion process. Conversion means that the country will develop high quality compatibility accounting standards, and there would be alignment of the standards of different standard setters with a certain rate of comprises by the adopting the requirements of the standards, either full or partially. Indian accounting standards are almost similar to FIRS, but the few carve outs so as to be make them suitable for the Indian environment. Okay, there are two techniques. First one is adoption process, and second one is conversion process. First, adoption means first adopt everything, and conversion means change to on way. Okay, conversion with IFRS will result in the following benefits: improves investor confidence across the world with transparency and comfortability. ठीक है, on compatibility improves inter-unit firm inter-industries comparison. Group consolidation will be easy, the same with same standard with or by all companies in group of irrespective of their global location. Acceptability of financial statement by stock exchange across the global, which is facilitate listing of Indian companies to international stock exchange, becoming IFRS. Okay, help for investors, cross-border flow of money, listing of companies at the global stock exchange, compatibility of financial statements, greater transparency, lower risk of error. Low risk of error. What are the curves outs in the accounting Indian Accounting Standard? The Government of India, in consultation with the ICAI, decided to convert and not to adopt IFRS issued by the ISB. Decision of conversion rather than the adoption was taken after detailed analysis of IFRS requirements and extensive discussion with the various stakeholders. Accordingly, while formation in Indian accounting standards, effort have been made to keep these standards as far as possible in line with the corresponding IAS, IFRS, and the reports have been made where considered absolutely essential. These changes have been made considering various factors such as terminology difference. Various terminology related changes have been made to make it consistent with the terminology used in law. Example, statement of profit and loss in place of statement of comprehensive income, and the balance sheet in place of statement of financial position. Okay, these are the terminology difference. Removal of obsession in accounting principle are practices. Removal of options use principle of the practices in the accounting basis. Difference in economic environment. Certain changes have been made considering the economic environment of the country, which is different as compared to the economic environment presumed to be in existence by IFS. These different areas are due to differences in economic conditions prevailing in India. These differences, which are deviation to the accounting principle and the practices studied in the IFRS, are commonly known as a carve-out. Additional guidance given in the accounting standards are over above what is given IFRS is termed in curve-in. Next is formation of accounting standards. This one is a chart of that. Departures result in into curve outs, not resulting into curves outs. Deviation of accounting principle stated in IFRS and removal of option accounting principle and practice in West IFRS. Okay.